became more successful and I found it and believed in it, I've pivoted even further into being heavily into Bitcoin. So I still carry both funds. Involved in a Bitcoin fund and I'm involved in a gold and silver fund, a gold and silver mining fund. So the background is really I've been a sound money advocate for most of my career, and the problem of fiat debasement that Bitcoin solves is something I've thought about for a long time.
So when you first heard about Bitcoin, did you understand it immediately?
Oh gosh, no, not at all. So when I first heard about it, I'll tell you my reaction to it. It was really interesting. My first reaction is, well, I understood the concept of separating money and state and having money on the internet and all that stuff. And I'd watched eCash and DigiCash and Hashcash and all these other attempts. And so I did the thing that so many people do, which is I use kind of a mental heuristic. I said, oh yeah, that's really nice, money on the internet, but we tried that, it didn't work. Because as we all kind of know, there were a bunch of failed experiments. And of course, each of those experiments figured out maybe another piece of the puzzle. And then whether it was Satoshi or a group of Satoshis, they all kind of eventually got it right with Bitcoin. So when I first heard of it in '09 or 10, I was extremely skeptical, and just thought, well, they can't do that. It hasn't worked so far. And then when it started working and the price went from, $20 to 170s, and then Volcker got things under control. And, most people weren't paying attention to sound money during the '80s, but, it's gotten steadily worse, this issue of government spending and debt. And I think now we're kind of at the point where the pot is really on the boil. It's happening very quickly now. And as we all know, we hit a record high price today, 109, and I see us going to 140 or 150 this year pretty easily, and potentially higher. But I'm very comfortable predicting that.
And show the book if you would. I have mine
Oh,
ordered.
sure, yeah, happy to. So the
Link
book,
down below.
yeah, what's that? Yeah, the book is available on Amazon. It's hardcover, paperback, EPUB, Kindle, and audiobook. So yeah, anyone wants to pick it up there, you can. I'm also going to be at Las Vegas and at Prague, and have tables to do book signings at both those. You can purchase it there. But sadly, I didn't get thousands of books. I got hundreds of books. So once I'm out, I'm out.
I'm getting mine signed, so Altcoin Daily audience, you got to line up behind me.
There you
But
go.
but uh you say you're very comfortable with Bitcoin will hit 140 by the end
Yeah.
of the year. How can you say that when we have trade wars, uncertainty? Seems like it's never been this uncertain.
Yeah, well, I think the trade wars actually kind of feed into all of this. I think all of the economic problems that are bubbling up all over the place, including, and then they'll look at another form of money maybe that's not losing value, let's say an ounce of gold, and the price of something in an ounce of gold won't be moving at all. And they'll say, huh, I get it. This one form of money is losing value, this other form of money is holding value. I'm going to spend the one that's losing value because why wait around for it to lose more value? And I'm going to hold on to the one that holds its value, which is gold. And so the law itself is written down as good money drives or bad money drives out good. And what that means is that if the money is going, if one form, and there are always a couple forms of money going around in any economy, if one form of money is going bad, i.e., being debased, that will cause people to hoard the good money and spend the bad money. So and at the extreme, like in Weimar Germany in 1921 through 23, they literally, throw out, the bad money and use wheelbarrows with which, because the printing presses were running so hot to purchase things, and they hang on to the good money, which in that time was gold or the dollar or the British pound.
What are one or two of the most important macro indicators to look at now? And I'm not talking about money printing. I'm talking about
Yeah.
macro indicators that would lead to that.
Yeah, so it's a great question. I think probably the most important macro indicator, well, there are four or five of them, but the price of gold. Notice it's hitting cost of groceries is just insane. I mean, it went up so much in the last 3, 4 years. It's been horrible. And so, and so I think we've got more of that in our future, sadly.
So as that happens, and like you said, Bitcoin's at all-time high, stock market at all-time high, housing market near highs,
Yeah,
everything. Is this an everything bubble? And do we need to see a crash before Bitcoin can rise from the ashes?
that's a great question. And I don't know the answer. I mean, yes, it's an everything bubble. So the reason it's a bubble and the reason we got to this point, and it's useful to discuss this, is that they kept interest rates at zero from 2008 to 2015. Remember, they had ZIRP, which stands for zero interest rate policy. They also kept them at zero from 2019 to 2022. And that created an enormous, enormous bubble because money was free. And so people borrowed and then they used it to lever up and buy yielding assets. Okay. Um, so the question of do we need it to burst for Bitcoin to go to new highs? It's unclear. I mean, if the Fed just pivots and starts printing money, no. But what I see is that we've got a Fed chairman who wants to be Paul Volcker, who's determined to correct the excesses of the COVID print. And so he's being very tough about not dropping rates quickly. And my sense is that what that's going to lead to is that something's going to break. I mean, we know the third Fed mandate is if something listening to this, they could create a lot of pain before they do the big print. I mean, they could, they know that they're on the knife's edge of currency failure. And so they're going to possibly try and delay the big print as long as possible. And, what would that look like? Well, I think if you go back and you study March of 2020, that's a good example of what it might look like. I mean, in that period when COVID hit, stock market went down 30%, gold went down 30%, Bitcoin went down 40 or 50%. Everything got hit because it was a trade correlation of one and liquidity was just way too scarce. And then, of course, what happened is on a Monday morning, Jerome Powell came in and announced, a laundry list of programs and said he's basically prepared to buy an unlimited amount of bonds, whatever it took to stabilize the financial markets. And of course, everything turned around very quickly. The stock market went back up, gold went back up, Bitcoin went back up, etc. So, but what that told me is that at some point in time, they were looking at the entire economy melting down. And you were younger, you weren't there, but I remember it quite well. I mean, in 2008, when that one happened, same idea, same event, although it was focused on housing and the banks. The not Jerome Powell, Hank Paulson, went down to Washington, D.C. and was literally, on his knees begging to Nancy Pelosi and said, if you don't give us seven today on historical metrics, and John Hussman is an analyst who does some fabulous work on this area. I mean, the stock market today is not even close to being cheap. In fact, it's extremely overvalued. So I think there's a possibility this next big print comes with a twist. And that twist is that, okay, things get troublesome. The bond market breaks, the stock market breaks, the Fed comes in, they print a ton of money. It certainly benefits gold. It certainly benefits Bitcoin because they represent forms of money that can't be printed. But it doesn't necessarily have to benefit stocks. I think you could see a situation where stocks don't go up as much as everyone's hoping, or they go sideways. I mean, and the reason for that is I think that what we'll be talking about when they do that print will be very disruptive to the economy and it'll cause a lot of inflation. And if you look at the stock market, the last big period of inflation in the United States was in the 70s. And I remember it, I was a teenager. And inflation was just raging and everybody thought it was an enormous problem. And the stock market went nowhere for 10 years. It was whatever to, one half of that. So yeah, I think the 4-year cycle is going to become less important. And I don't know what the peak of this cycle is. I mean, I've seen, Samson thinks it's 1 million. I've seen smart guys who think it's 200 or 300,000. That wouldn't surprise me. I think 140 is in the bag. I think that's a no-brainer. And then, then I think probably, and what'll cause that is the same thing it's always caused. You see a little bit of it right now, actually, with all these treasury companies taking off and trading nuts. You see a little bit of kind of the animal spirits and the frenzy. I mean, this reminds me a little bit of 2000. Do you know what I mean? And so I could see us, ripping into a $200,000 Bitcoin price at the end of this year, and Metaplanet and Sailor's Company, and I mean they've all gone up a ton, and everybody's feeling great and thinks it's going to 400. And what'll happen is always does is a lot of speculators will enter and they'll get levered and they'll chase it and everything else, and then suddenly there'll be no more sources of new demand. It'll turn around and it'll wipe those people out. It'll come back from 200 down to 130 or something. I'm not uncomfortable buying it here at 109 because I don't think it'd go much below this on a retracement. But if it were at 200 or 250, I'd probably hold off on my purchases. I think you get a chance to buy it cheaper on the next downswing.
Bitcoin in 5 years by 2030.
Yeah, so I use the power law model as kind of my base case. And I think, and the interesting thing about that model is it kind of shows what the fair market value price ought to be. And then it also shows you what the potential estate, 900 trillion. What's Bitcoin, 2.1 trillion today? I mean, and it's the soundest form of money we've ever had. It can't be printed. I mean, it's got to go up. It's hard to know the rate, but people on the power law, I'll tell you, you can. But if you look at it, looking backwards, on a log basis, it's the R squared on it is 97%. And anybody who's had statistics class knows that if you've got a 97%, fit on a curve with a model, that's not a bad model.
Well,
So
for the power law, I've watched many explainer videos from Fred Krueger and the gentleman that sort of popularized it. I forget his name.
Anastasia, yeah.
Yes, yes. And still, could you explain it for like the grandmas out there or for somebody who's never heard of it? What is the power law and why do people hold
I'll
this?
try the best I can. Yeah. So what it is these guys looked. I mean, Bitcoin. We have Bitcoin prices going back 16 years now, right? And so you can see this curve at which the price of Bitcoin increased from pennies to where it is today. And what they've done is it's a mathematical model where they've looked at time and price on log scales. I think it's like a log power of 4 on each side. I'm not sure of that, but they would explain it to you. And using that log scale, you're able to predict, you can look at where it's been. And what I said earlier is true. They fit the numbers against that model with a 97% grow. And we're seeing that. I mean, we're seeing, just little things, but steady, Steak and Shake's now taking Bitcoin. We now have an ETF. We've now got the guy who runs the largest asset manager in the world, Larry Fink, saying he believes in it. I mean, it's just slowly but surely more and more people are getting it. And so very much like, a lot of other things and their adoption curves, once we're about to enter, in my view, the steeper part of the curve where it's going to more and more people are going to adopt it, and that's going to cause the price to go up faster.
Well,
Perhaps, yeah, go ahead.
it's for those reasons, Bitcoin today versus 2013, that Bitcoin back then was an asymmetric bet. Bitcoin's
Yeah,
still an asymmetric bet, but it's much safer, yet still the most asymmetric bet out there,
I
which is
think that's
crazy.
right. I think it is the most asymmetric bet out there. And one of the things I love about it, I mean, I made my career as a professional investor trying to find companies and bet on companies. And I can tell you that what's hard about doing that is that companies are run by people and people make mistakes. And one of the things that's really beautiful about this as an investment is that it's a mathematical algorithm that just kind of keeps ticking along. It really doesn't depend on a management team. Not entirely true because you've got core developers around the edges, playing around with stuff. But because everyone's got to vote on changes and we're pretty well down the road, I think the risk of a problem arising with it are pretty low. And I just love the fact that it's got this asymmetry. Some of the largest, if not, well, they're one of the largest purchasers of treasury bills because they take cash in, they use that cash to buy treasury bills, they issue a stable coin that's supported by the treasury bills. And so in a government that needs continual, treasury bill issuance, to see the value of Bitcoin grow and to see stablecoin use grow, that actually helps them. They actually want to have that happen. Now, what they don't realize kind of in the back door is that eventually the dollar is kind of we're attacking the dollar, but we don't have to tell them that. We can just say, hey, look, we're going to help you we're going to buy some of your debt. Don't you want to support us? Yeah, okay, great. And I suspect that's how they got it through Congress. So, on balance, it's all good because I think that to get more and more people aware and into the microcosm or the system of, electronic payments, that's a good thing.
Larry Lepard, thank you so much for joining me. Links for all your stuff down below. I want to
Oh,
have you
thanks.
back in 6, 8 months, revisit some of these things.
Whatever you like. And I just want to tell everybody I'll be at Las Vegas. I don't know if this will be out before then. I'll also be at Prague, and I'm happy to sign books at both of those.
I'll be there too. Come say hi. I'll be coming to say hi to Larry. But final thoughts for the Altcoin Daily Army.
Well, I would just say, don't sell your Bitcoin and get off. If you don't have any Bitcoin, get off of zero. I mean, to me, this is an opportunity that your grandkids will, remember, and don't mess it up. We got a commodity, all Bitcoins are interchangeable, where the supply is fixed. So if the price goes up, we don't get any more of it. The price just goes up. So, that's what makes it so incredibly unique. And I think so hard for many, many people and TradFi people to get their head around. Do you know what I mean? And that's why those of us who really understand it deeply, just are pounding the table that you've got to buy some of this because it's going to be so much higher and you're going to have enormous regret. I mean, if you're looking at it 109,000 right now, and in 5 or 10 years it's at 2 million and you knew about it, but you didn't buy it, you're going to experience regret. Now, I'm not saying you got to take your entire net worth and buy it. No, 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 no. You got to, but I always just try and say, get off of zero, take a 1% allocation, take a 5% allocation, and then forget about it. That's the other great thing about it, compared to companies where you got to read the reports, list of management, talk about.
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.